If you have crossed 65 years of age, or if you have a parent, a grandparent, or someone important to you who just reached that milestone, then what I am about to reveal to you over the next 30 minutes could restore thousands of dollars to you this year alone. And the vast majority of individuals watching this right now have completely no clue that this money is sitting out there simply waiting for them. Somewhere in the United States today, a 70-year-old woman is going to write a check for a bill she is not legally obligated to pay. A 78-year-old man is going to log into his bank account and watch money disappear for something the law clearly says he does not owe. This takes place every single day in every single state to millions of retired individuals. And the concerning part is nobody at the bank, nobody at the county office, and nobody at these billing companies is ever going to call you up and say, hey, you do not actually owe this amount. So remain right here with me for the next few minutes because I am going to guide you through 5 specific bills that seniors are legally allowed to reduce or eliminate completely once they turn 65. My name is OG John AG, and this is my channel, the channel where we explain exactly what the system wants you not to notice, presented in plain and simple language, no complicated terms, just authentic information that everyday people can actually put to use. Let us dive right into it. Let us start with the very first one, and this one is probably the biggest single item on this entire list, and that is property tax. In the vast majority of states throughout this country, there are specific property tax relief programs created specifically for seniors, and depending on which state you call home, these programs can bring your property tax bill down by a significant percentage, or in some situations, freeze it in place entirely, or in certain cases, reduce it substantially. These programs carry different names depending on which state you live in. Certain places refer to it as a senior exemption. Others call it a homestead exemption for older residents. Some refer to it as a tax freeze or a circuit breaker program. The government recognizes that a large portion of retirees are living on a fixed income, which means their earnings do not increase year over year the way that property values tend to. The challenge is that these programs are almost never applied automatically. You need to be aware the program exists, you need to complete a form, and sometimes you need to provide documentation proving your age and your income level. And if you never submit that application, the county office is not going to track you down and hand you the benefit. Picture a couple, we can call them Frank and Linda, both retired educators, who finished paying off their home 15 years ago. Each year, their property tax statement arrives a little higher than the one before because the surrounding area has become more desirable. They simply accepted it as the way things are. Then one afternoon, their neighbor casually mentions she applied for a senior exemption, and her annual bill dropped by a noticeable amount. Frank and Linda had spent their entire retirement living within 2 houses of this program and had never once known it was there. So here is the action I want you to take. Contact your local county assessor's office or go online and search for your state name, followed by the phrase Senior Property Tax Exemption, and ask them directly, am I eligible for any senior property tax relief? It might use up 20 minutes of your afternoon, and it could result in real savings every single year from this point forward. The truth is that a significant number of these programs have income limits that are much higher than most people would anticipate, and some of them have nothing to do with income whatsoever. There are also programs available in various states that are specifically designed for surviving spouses, and certain of these programs do not remain in effect permanently once your application is approved. Some require you to reapply on an annual basis or once every couple of years in order to keep the benefit running. Now, before we continue ahead to the second bill on this list, if you are getting value from this content, please do me a small favor and click the subscribe button and press the like button as well. It genuinely helps this channel because it signals to YouTube that this type of content deserves to be shown to more people. All right, let us move forward because bill number 2 might end up surprising you even more. The second bill that a large number of seniors are legally not required to pay, or at minimum not required to pay the full amount of, has to do with federal taxes on Social Security income. A significant portion of retirees operate under the belief that the moment they begin receiving Social Security payments, that income gets taxed automatically, but that is simply not the reality. Whether your Social Security benefits end up being taxed at all actually comes down to something called your combined income, which basically means your adjusted gross income, added together with any non-taxable interest income you receive, plus 1/2 of your total Social Security benefit amount. If that combined figure falls below a specific threshold, then the federal government does not tax any portion of your Social Security income whatsoever. Nothing, not even a single cent. A considerable number of retirees wind up paying more than they should because they simply accept the standard withholding level without ever actually running the math to determine what their real tax obligation looks like. And this is exactly the reason it is so worthwhile to sit down either with a free tax assistance service designed towards seniors or with a reliable tax professional and go through the actual calculation of your combined income to determine exactly where you stand. You might discover that tax withholding has been coming out of your Social Security payment this entire time for absolutely no legitimate reason. And beyond the federal tax situation, a significant number of states impose no tax whatsoever on Social Security benefits, regardless of your income level. If the state you live in happens to be one of those, you could be looking at zero state tax and minimal to no federal tax on your Social Security income. Picture a retired man we will call Robert. Robert spent over 3 decades in the workforce and now survives primarily on his Social Security benefit along with a modest pension. When Robert originally filed his Social Security application, a representative asked him whether he would like to have taxes withheld, and Robert responded, "Sure, go ahead and take something out." But no one ever checked with Robert years later to examine whether his total combined income was even high enough to cross into taxable territory. As it turns out, Robert sits comfortably beneath the point at which any of his benefits would even register as taxable income, which means that every single month, Robert has been allowing the government to keep money that was always going to be returned to him anyway. Robert represents an enormous number of people. There are retirees just like him, distributed across every town in this country, quietly giving over more than they owe. Let us continue on to bill number 3. And this one has a direct impact on nearly every single individual over the age of 65, and that is your Medicare premium. What an enormous number of retirees genuinely do not know is that specific programs exist to help seniors with limited incomes pay less, or in certain circumstances pay absolutely nothing at all for that premium. These are commonly called Medicare savings programs, and they operate at the state level, receiving funding from Medicaid. Depending on which specific program you turn out to be eligible for, based on your income and your overall financial resources, these programs can cover your entire Medicare Part B premium on your behalf every single month. They can assist with deductible expenses, coinsurance costs, and even help toward the cost of prescription medications. Your Part B premium on its own, month after month, year after year, builds up into a substantial total across the full span of a retirement. If a program is available that could eliminate that recurring monthly expense entirely, and you happen to qualify but have never submitted an application, that represents money consistently leaving your possession for no valid reason. The difficult aspect is that neither Medicare nor Social Security will automatically enroll you into these programs. The process requires you to apply directly through your state Medicaid office. Many retirees operate under the incorrect belief that these programs are exclusively intended for individuals in severe financial hardship, but the actual qualifying limits tend to be considerably higher than most people would anticipate. So if you are currently enrolled in Medicare, a brief phone call to your state Medicaid office or a quick online search combining your state name with the phrase Medicare Savings Program is genuinely worth your time. I find myself thinking of a woman named Carol, a retired nurse who gave decades to caring for other people. Carol worked on the assumption that because she received a modest pension payment on top of her Social Security income, she was automatically excluded from any form of assistance. It was only through a casual conversation at her neighborhood senior center that she learned the income limits for Medicare savings programs were actually higher than she had assumed. She placed a single phone call to her state Medicaid office, completed one straightforward application, and within a few months, her Part B premium was being covered for her each month going forward. Now let us get into bill number 4, and that is your utility expenses, which includes your electricity, your natural gas, your water service, and in certain cases, even your telephone and internet bills. Throughout the country, there are utility assistance programs, some managed through federal channels, some at the state level, and some provided directly by the utility providers themselves, all created specifically to help seniors and households with low to moderate incomes. Among the most commonly recognized is a federal initiative that helps offset the cost of heating and cooling a home, particularly during extreme temperature periods when energy bills reach their peak. Beyond that, a substantial number of individual utility companies quietly run their own programs, offering senior rate reductions or discounted billing tiers. There is also a program specifically established to provide reduced-cost phone and internet service to qualifying low-income households, a category that now includes a growing number of retirees living on predictable fixed incomes. It is worth reaching out to your utility provider directly and asking the straightforward question, do you have a senior discount available, any kind of low-income assistance program, or a budget billing arrangement? And it is worth going online to search for energy assistance programs specifically serving residents of your state. For a retiree operating on a genuinely fixed income, those high-cost months are frequently the most financially difficult months of the entire year because you simply cannot delay paying for heat during the dead of winter or air conditioning during a dangerous heat event. If the thought of working through an application on your own feels like too much to tackle, local senior centers and area agencies on aging will sit right alongside you and guide you step by step through the entire application from beginning to end at no charge to you. We have now passed the halfway point of this list, so if what you have been hearing is striking a chord with you, please take a moment and leave a comment below, sharing which item surprised you the most. And if you have not yet done so, please go ahead and click that subscribe button. All right. Let us move into the 5th and final bill on this list. The 5th item we are examining today falls under the category of vehicle expenses, specifically vehicle registration costs, and in certain states, an annual vehicle property tax as well. In a genuinely surprising number of states, reduced registration fees are provided exclusively to senior residents, sometimes determined by hitting a particular age milestone and sometimes based on income level. Additionally, certain states charge an annual vehicle property tax, and these states frequently offer seniors some form of exemption or rate reduction on that expense. In numerous states, seniors who meet eligibility requirements based on a qualifying medical condition may also be entitled to discounted or entirely waived fees for accessible parking permits and placards. Looking past the state-level programs, a wide range of private sector companies provide their own senior-focused discount structures. Auto insurance is a prime example. A very large number of insurance providers make available what is known as a mature driver discount, sometimes activated simply by reaching a qualifying age, and in other cases earned by completing a state-recognized safe driving refresher program. The overwhelming majority of retirees have never once raised this question with their insurance provider, because the insurance company certainly is not going to reach out and bring it to your attention. When you consider reduced vehicle registration fees, the potential for vehicle tax relief, and a mature driver insurance discount all stacked together, you are looking at a genuinely meaningful sum of money saved each year. So let us bring everything together. Property tax relief that has the potential to freeze or meaningfully reduce what you owe on your home year after year. Social Security income that a substantial number of retirees either face no taxes on whatsoever or are being over-withheld on out of habit. Medicare savings programs that, depending on your income level, could pay your Part B premium in its entirety. Utility assistance programs that could take a real reduction out of your electric, gas, water, phone, and internet costs each month. and vehicle-related savings opportunities through reduced registration, possible tax relief, and insurance discounts. When you stack all 5 of them together and recognize that the majority of these are recurring benefits that repeat month after month and year after year, you start to genuinely understand just how significant the total amount of unclaimed money really is. I want to leave you with a single closing thought. None of these programs will ever appear at your door on their own. Every single one of them requires either you or someone in your corner to take the first step and ask. So here is the specific action I am genuinely requesting you to take. Select just one of the 5 areas we covered today and actually make that call before the week is out, not at some vague future point, this week. Because what separates the people who receive these benefits from those who never do is almost never a matter of income. It comes down to one simple thing: whether or not they picked up the phone and asked the question. If this video gave you something valuable to work with, please take just a moment and share it with someone who has crossed 65 and may be unaware of any of this. And if you have not yet subscribed to my channel, right now is the perfect moment to do that. Post a comment below and let me know whether you plan to investigate into any of these 5 areas for yourself this week. Thank you from the bottom of my heart for staying with this all the way to the end, and I will be right here waiting for you in the next video on my channel.